Welcome back. Now let's take a look at how the markets have performed of late. And really over the last couple of hours, certainly things have shaped up, having seen some negativity as well filter through into the market. It was a pretty mixed bag out in Asia as well early on this morning. Of course, yesterday in the evening out in the United States, we actually saw numbers come out of the big four tech firms. The day before, they were in Congress, of course, testifying and perhaps getting even a badgering from U.S. the U.S. Congress, should I say. And now the big four, Facebook, Apple, Amazon, as well as Alphabet or Google, also reporting their results yesterday, all of them surpassing Wall Street's estimates. So a good picture out on that front for the market. So it did bolster market perceptions quite a bit. But unfortunately, by the end of the close in the United States, though, we saw negativity. And the only reason for that is because those big four tech counters only reported after market close. So that effect will perhaps only come through a little bit later on. The positivity then filtered through into the Asian market initially, but unfortunately didn't manage to stick. So we get that negativity filtering through there. And the key reason for that also could have been that negative growth picture out of the United States. We saw the US record then their second quarter GDP number, and that is a contraction of 32.9% for that second quarter between April and June. That's the contraction, 32.9%. I repeat, and the reason there, of course, the lockdowns have continued to affect that economy and absolutely slashed any business activity in that economy there. It's the worst figure of GDP for the United States since the Great Depression, all the way back then, even in the 1940s on that part there too. So that means that the US market last night was in red. So too then was some parts of the Asian market. Not too much to write home about when one takes a look at the European market. Only the FTSE 100 sits in negative territory, while there's slight gains for Germany and France there in that market. Slight positivity as well on the local front. So that's gone up almost 2/3%. They're still above 56,000 points. So some good numbers filtering through there. Of course, some earnings picture news as well coming through yesterday. Anglo Gold really saying that things are getting rough, and yes, 16% fall in their revenue, while at the same time the CEO Mark Kutafani asking for a meeting then with President Cyril Ramaphosa. And the reason for that really is to try and get more certainty for South Africa's mining industry and then boost investment, because he says in order for the country to grow, we're going to need a lot more foreign investment than we've ever needed before. It's clear, really, when one takes a look at the businesses across the globe. So the banking count is taking a bit of a hit as well today. They go down 1.5%, pushing the financials into some negative territory as well. The gold index, that has run quite hard of late, but today taking a bit of a breather, more than 1% weaker as well, while the resources are pushed higher though nonetheless, with the platinum counters doing fairly well on that front. Industrials overall more than 1% to the good. Brent crude has gone up today, still sitting in that tight band as we've continuously noted. Then of course next month is when that's an increase in supply for Brent crude is expected back from OPEC, 1.5 million barrels per day. So perhaps more questions around what will happen to that price. Platinum though not seeing as much demand, sitting just above that $900 a fine ounce mark, with gold however climbing 0.7%. The runway here seems large and mighty then. And how far can that gold price go? It's now sitting just near that record territory that it hit just earlier on this week, $1,972 a fine ounce. For now, it was at $1,975 earlier on this week to hit that record number. Perhaps 2,000, certainly even a matter of time and not necessarily if it'll happen at all. Weakness, unfortunately, then for the local currency. Looks as if we're headed back towards 17 Rand against the US dollar. More than 1% weakness across the main three currencies then globally, with the dollar, the euro and the British pound all getting a little bit stronger on the local index then. All right, let's have a chat then with Roy Mutoni, who is a fund manager then at Absa Asset Management, joining us today via Zoom. Roy, thank you so much for the time. Quite an interesting market, and one takes a look first of all at that US growth figure, which should bring in, or should I say lack thereof, when it comes to that growth figure, which ultimately hurts the market quite a bit.
Now, just remember that 37 or 34% that was seen was expected. This was the worst time, the second quarter, when the pandemic had really hit. So there was lockdown, there was stay-in-place regulations, and the virus was spreading like mad across the US. So this was broadly expected. It was in the numbers. I think it's just that it's a huge number nonetheless.
Yeah, I mean, of course, if you lose almost a third of your economy, it certainly tells you the story, doesn't it? All right, at the same time, then, after market close, we then saw the big four tech firms, the likes of Facebook, Apple, Amazon, all really posting results that actually beat Wall Street estimates as well. I guess it bodes well for the tech counters, but what does it say then about the recovery for the global economy if only those shares or those counters seem to be doing well?
So what those counters are showing is significant resilience of big stocks that have multiple revenue streams that deal both in the US and globally, and that also have significant balance sheet strength. So you've seen during times of crisis, this is what tends to happen. The biggest, strongest, and the best tend to outperform because people are looking for certainty and they're not willing to wager on earnings recovery from businesses that may go bankrupt. So in reality, what you're seeing here is that trend happening amidst struggling economic environment. So both Facebook, Google, and also Amazon just showed that the tentacles really reach into the economy and benefit from that stay in place, whether it's people downloading more, buying more phones, sending more stuff online, and trying to operate from an online rather than an offline perspective. And these businesses being able to flex themselves because they're the only ones that have any capital to be able to deploy and to offset the increased costs of functioning during an environment such as this. So it's a perfectly natural and perfectly normal way of looking at markets. It's just that these companies have become incredibly huge in the context of even the US economy.
Yeah, if that's the safe haven of the US economy, seemingly gold is the safe haven of the global economy right now. Nearly $2,000 a fine ounce. Can we get there sooner rather than later?
It's amazing. I mean, this morning we were at 1975, but the reality is it's tracking very close to what's happening to real rates. Real rates in the US, I mean, the US 10-year is currently at about 50 bips. Real rates are probably negative. So if you're a risk-averse investor, typically what you would want to do is go into US Treasury bills or Treasury bonds. Those are yielding negative. So your opportunity cost of going into gold, which is your other safe haven, reduces. Gold has no income, it only has storage costs. So, and those storage costs at this point in time are lower than those negative, than what you'd have to pay if you went into bills. So that's a natural standpoint. If you think about it, where the economy is right now, what you're seeing is uncertainty, probability of second waves, geopolitical tensions. You want safety, you want sanctity. The only place you'll get that is in gold.
So you would have hoped for safe rather than sorry in a time
level
like this then? Yeah,
Sorry,
we'll see how quickly it can get there. No, I'm saying we certainly would hope, of course, for safety at a time like this, as you made note of there. And as you said, the geopolitical tensions around the world certainly hurting the market quite a lot then as well. If one aims for safety, when you put in a new CEO in place, having had the likes of Mark Cutifani, as well as Srinivasan Venkatakrishnan as your CEO, one would have hoped that you'd get even more stability, because those CEOs stayed on for quite some time to help Anglo Gold Ashanti build on to what it is. But unfortunately, Kelvin Dushnitsky not staying on for too long, 2 years in charge, and now he's said adios. What have you made of the Times man in charge?
I guess it's tough times. First of all, if you look at his tenure, he was incredibly successful. He managed to reduce the cost curve on average across AngloGold's mines. He rationalized the mines, reduced the costs, managed to get rid of the SA operations, so helping the share price shed that SA discount, and he's put it on a fantastic footing. I think just like anybody else, the experience he's had being based in Joburg, while his family is in Toronto during this COVID crisis, probably just has made the opportunity cost become even greater of being away from his family. I mean, there's no official reason that's been given, but I think that's the most rational way to think about it. Will AngloGold miss him? Absolutely. But I think the work that he's done and the steps that they've been able to take over the past 2 years will hold them in good stead. There's solid operational management there. I think each of the mines are well managed. They're good quality, good deposits, and nicely diversified across Africa.
Yeah, fantastically right. Look, he came in and said he'd like to sell 3 mines. He sold 2 of the 3. He said the mine in Argentina is perhaps of better quality and will keep that. He said the Obuasi mine in Ghana is going to ramp up its production and get back to normality. That certainly happened, and it actually happened on budget as well. He then sold the local mines here in South Africa, so pushing Anglo Gold Ashanti out of South Africa and selling that to Harmony Gold then for 4.4 billion rand. He certainly made a whole lot of moves in 2 years. I don't think his tenure will be forgotten at all. Roy, appreciate the time. Thank you so much for it. Roy Mutoni is a fund manager at Absa Asset Management, then joining us to help unpack this market picture. And those news then, of course, of the CEO of Anglo Gold Ashanti, Kelvin Dushnitsky, will be leaving that company as of the 1st of September, exactly 2 years since he joined the miner then as well, in what was a move from the Canadian firm Barrick Gold.